When I came as a customer and I sort of said, well, I want to make some changes, I was astonished to find that I just couldn't. They said, well, no, you've taken out a long-term 25 fixed product and you can't change it. I didn't understand that. I'm in the insurance business and I don't understand why is that? You can change every other insurance. Why can't you change this? It doesn't meet my needs. I need it changing. Anyway, it was an irritation, one that I hadn't realized would live with me for a lot longer. My name's Phil Zeidler from DeadHappy, and this is the future of insurance.
This episode is brought to you by Pinpoint Predictive, who provides P&C carriers with individualized intelligence to significantly enhance risk selection. Pinpoint scores leverage the latest advances in behavioral economics, enabling clients to boost key predictions at the time of quote, including things like claim frequency, SIU referral, litigation propensity, cancellation, and home inspection outcomes. Pinpoint's data enrichment and explainable analytics platform helps optimize front-end processes across marketing and distribution channels, including aggregators, agency book rolls, MGAs, brokers, and direct. Pinpoint Predictive is backed by Stanford StartX, Jazz Ventures, and part of the InsurTech New York Accelerator. To see client endorsements and learn more, visit pinpoint.ai.
Phil, thank you for sitting down with me, giving me some time to hear a bit about what you're building at DeadHappy.
You're very welcome. Great to be here.
I will say the name, and I told you this before we started recording, just the creative behind everything you're doing is brilliant, but the name right away struck me really, really clever. For those of you who haven't figured it out, life insurance is the space, hence the dead part. But we'll talk about it, but it's everyone should go to the website and just have a look, and it's brilliantly done, really nicely worded, and it really does strike a tone for so many of the things that we don't want to face, but we should. And you do it in a way that really draws you in. Like, yeah, you know what? I should think about this. The death wish idea is brilliant. Anyway, we'll get into all of that. But can you give us a little bit of background on you and how did you arrive at starting a life insurance business to begin with?
Of course, yeah. Well, let me be clear. It wasn't on the grand plan of my grand plan of life at all. My background is mainly general insurance. I've set up several general insurance businesses many years ago. The third one I set up, I exited 2007. So, gosh, 14 years ago. That was what is the largest white labeled partnership business selling auto and home insurance. So in the UK, if you're buying either of those products through banks, building societies, the post office, you buy it through the company I set up. I was fortunate; we had great success in that space. I went on to do lots of different things. Some of it in the insurance space, and some of it outside in the health space, music, you name it. Mainly as non-exec or chair roles. I really had no intention of starting another business or let alone a life insurance business. But the reason I did, actually, you have to scroll back a little bit further back. It was a personal incident that had, I suppose, what I hadn't quite realized is quite such an impact on me. And that was back in 2005. I was very fit, very healthy. Life was good. Married, 2 young children. Didn't feel very well one day. Went home, which was very rare for me. Went home, told my wife, who's a doctor, I don't feel well. She looked at me. She said, "No, you don't look well. Go to the hospital." And I woke up 3 weeks later on intensive care.
Wow.
Yeah. So. I was alive and I am alive and I'm perfectly healthy now. It was actually an infection that basically went septic and I went into overwhelming sepsis, so septic shock, my body shut down. So,
wow.
And when something like that happens to you, you stop and think, what would have happened to my wife, my young children, my family, my loved ones, my friends, as a 38-year-old, and it was literally touch and go. So that set me on, unknowingly, that set me on the path. I reviewed my own insurances. I had life insurance, I had a will and all the rest of it. But when I came as a customer to look at these products and I sort of said, well, I want to make some changes, I was astonished to find that I just couldn't. they said, well, no, you've taken out a long-term 25 fixed product and you can't change it. And I didn't understand that. I'm in the insurance business and I don't understand why is that? You can change every other insurance. Why can't you change this? It doesn't meet my needs. I need it changing. Anyway, it was an irritation, one that I hadn't realized would live with me for a lot longer than I'd thought. And as a curious type, I guess, when I'd sold the business a couple of years later that I was running and got into all sorts of different things, it kept coming back to me. It was a bit like an itch. I just felt I needed to scratch. Why is life insurance such a poor product from a customer perspective? The truth is, though, it wasn't until I met my partner, my co-founder, Andy, in 2013, who'd had a very different experience, but similar in that he hadn't been able to get life insurance himself. And that was a real frustration for him. And he was, we're definitely a bit of a yin and yang. I have an insurance background. He has anything but an insurance background. He's a digital marketing a guy who set up one of the first online gaming platforms. So very much tech savvy, but a brand guy as well.
Yeah.
And one of his things that when I met him, we were introduced by a mutual friend. He'd sort of had this issue around the whole of this death space. Why is it dealt with in such a morbid and just depressing way?
Yeah.
Not only do the products not work very well, it's the most awful thing to process, to have to go through to try and buy this stuff. And I'll tell you now, I'd love to claim credit, but he had already registered this name, DeadHappy.
Okay.
And we got talking and we had an amazing conversation. And from that moment on, I said, right, we got to do something about this. We can change the whole of this space. And DeadHappy, there was no debate. That was the name of the business. We love it. It's an oxymoron, clearly, but it absolutely illustrates what we're trying to do in the space.
Yeah, well, so what's the name that struck me? I was interviewing the guys from InsurTech New York, and they mentioned DeadHappy along with some other startups, and I stopped them. I was just like, that's a brilliant name. And not many insurance companies have a skull in their logo. So that's, I give you credit for the boldness there. But it's easy to look at some of the startups and say, well, that's a bit of hype. There's some who really aren't doing anything different. It's just a bit of kind of cheeky marketing, and that's been successful for them, but you dig behind the covers and there's not much there. And that's why I actually was so interested and reached out, was as I looked into it, yes, very cleverly worded things. But that's one of the problems in life insurance, is the understanding of it, drawing people into the process without scaring them or having it be morbid or difficult. It's almost an invitation to engage in this planning and the protection flexibly, simply. And it's just from perusing your site for a couple of minutes. And I'm in the US, so I couldn't buy anything, but so I couldn't like go through the journey and see, oh, well, this is materially better or different, et cetera. But it really does stand out as that. So yeah, clever name. It's great that it stuck, but it's deeper than just someone who had a brilliant idea on the marketing side, or was able to secure a URL that probably should have already been taken, but luckily it wasn't.
No, absolutely. And I guess in some ways it's a bit of a double-edged sword for us, because so many people sort of see this, the brand, the alternative brand, and the tone of voice, and they think that's the business.
Yeah.
And in truth, that's just a very small part of the business.
Yeah.
A very important, but very small part of the business. So we have reinvented the whole of the life insurance product to make it fit for purpose. And we passionately believe that most products out there available just can't possibly meet the customer's needs, as was my experience. But for all the things that we love around our product and how it performs for the customer, what we are well aware of is it doesn't matter how good your product is. If you don't engage people, if you don't get them to understand why they might need this thing, then all you're ever going to do is serve the customers who are already buying this stuff,
Yeah.
the ones who are already seeking it out. And the
Yeah.
biggest problem in this space is the massive protection gap. And I don't know, Brian, if you're familiar with some of the stats they're sort of banded around, almost like they don't matter these days. In the US, you've got a 25 trillion protection gap.
Oh,
In the UK, it's only a tenth of that. It's still, we're a lot smaller country.
Yeah.
It's massive.
Yeah.
So I think the US number is 42 million people. I'm more familiar with the UK stats, which is 8.5 million people who have dependents. So maybe a partner, children, whatever it is, liabilities like a mortgage, but have no protection products whatsoever. Yeah. And this is what really drives us, is the current industry serves people arguably adequately, who are savvy, who know about this stuff, who you've got the time and energy to sort of work your way through all this hard. And if they don't have too many tricky complications and stuff like that, it sort of works. It serves a portion of people, but it fails of an enormous number of people in the market who need protection.
Yeah.
And that is where we're focused. The stat that I think is most arresting for us, and again, forgive me, it's a UK based one. I suspect there's an equivalent in the US, which is every day 112 children lose a parent in the UK. And of those children, of those 112 children, 50% of them, the families won't have protection in place.
Oh.
And when you start thinking about, not only do those children obviously have to deal with the extreme grief of losing, a parent, but most of them are sent into, abject poverty in financial ruin for not having something so simple, as a life insurance product in place, and something that doesn't have to be expensive. It doesn't have to be complicated. But that failure is, for us, it's a failure of the industry to help people access these products. And that's why we're here. That's what we're all about. That's the thing that I reflected on, when I'd had my experiences. What would have happened if I hadn't got life insurance and I died? And well, you don't really want to think any much further than that. So that's what we're about.
So that's a noble purpose. I mean, when you think about what insurance is supposed to be here for, life insurance is, there's no question about what the event is. In P&C, we can talk about, well, a tree fell on our house, and that's, that's terrible. The kids didn't get to sleep in their home for several weeks, or what have you, or the house burnt down. Death does come into the mix sometimes, but in life insurance, it's always about exactly what you're talking about. So it almost puts a finer point on it.
Yeah. And the thing that I don't understand is why, as an industry, we tend to try and overcomplicate these things. So life insurance is possibly the simplest product ever. You pay some money every month, and if you die, the insurance company pays out you a lump sum, and that's it. There's nothing more to it. So why everyone insists that we need complex advisors in the process? It doesn't make any sense. And as I think we and many, in the US, you've got guys like Ethos and Ladder Life and really ripping it up, are demonstrating you just don't need advisors to overcomplicate it. They're just another mouth in the food chain. I'm not saying that there is a place for advisors. Of course there is, an important place, but for the majority of people, tends to be the lower socioeconomic, who would never even think and dream about going to an advisor for a product. And we need to make these products accessible, and hence, our journey. And very simply, if you understand, we have our product you can buy online on your mobile phone. It's all mobile phone technology, in about 3 minutes, anytime, day or night, without talking to anyone. It's a straight through process. It's a really simple. There's about 4 medical questions, no medical required. It's really, really simple. And we think that's so important because, and we see as you might imagine, with that sort of short funnel, very high conversion rates,
Yeah.
because we make it really simple, really easy to understand, really easy to engage with. And that's what people are looking for. If so many people we speak to, and particularly if you think it's the core audience, people who buy this stuff, it's the millennials, people who are just getting into relationships, you know, married, children, mortgages. They're 25 to 40-year-olds, you know, and they you know, they want to buy things online. They don't want to speak to people. They just want to buy it digitally, and that's the market we think is being so desperately underserved today.
And they don't need necessarily a complicated structure of multiple products and a mix of annuities and whatnot yet. Maybe one day, but they're not
Indeed,
at that advisory point probably.
Exactly that. And I think, you know, we see there's this, you know, many of those people may well go on to need all sorts of support and advice, and that's great, and no issue with that. And we see this as a stepping stone for them, but for many people it's all they'll ever need. And that's what we set our stall out, and that it's such a huge market who are underserved. We're not trying to, you know, wrestle other people's business away from each other. We're just trying to serve a market that just doesn't buy this stuff.
Yeah, there's lots of green field to grow into without just churning in the share stealing game. I'm curious about, from a viability standpoint, or the economics of it, that life insurance is so predicated on that mortality estimation and how much time you have to earn your return, and that's, you know, that's how you make the numbers work, versus, you know, P&C is more about your combined ratio. And yes, the investments matter, but you have to get the underwriting pricing right, less so the duration. With your ability to adjust, and I know that's what drives a lot of that, you know, you bought this product, we can't change this because we locked in all of those assumptions, so we need to have it float for this many years. And to create the flexibility that you have. And I see that you've got points where you can reevaluate and say, you know, have your needs changed? Does your coverage need change? Have you changed? I love the way you talk about, like, we're evaluating you as you are today, not 20 years later when you're wrinkly and old, or hopefully longer than 20 years before that point. But how are you able to bring that flexibility in without creating so much uncertainty in the cash flows that the economics fall apart? Like, because that's sort of the lifeblood of life insurance underwriting. How are you able to pull that off? And frankly, and get reinsurers to back something like that up, because it breaks the only way that, you know, the industry has known how to do this so far.
Well, that is true, it does. But we think the reason that the industry has failed to do this is actually nothing to do with the underwriting. It's more to do with their systems and flexibilities. Because from an underwriting perspective, life insurance is one of the most basic things you've ever seen in your life. All the questions that you get asked, most of them are about excluding you from cover or including you in cover, rather than actually giving a rating. And even when you're rated for conditions, I mean, you know, as I say, my background is in motor insurance. I have a business I was involved in as chair and investor in telematics. You know, you're starting to talk about some real granular, intricate underwriting at an individual level of how someone drives. Now that's underwriting. Life insurance is just a mortality table. It really is that simple. It really, really is. And they're taking about, on the averages, they'll take in a few of them, underwrite, do some loadings for some conditions, but it's some of the most simple underwriting you've ever known. They know they sell these products for 25. I say that sounds terribly, but the industry sells products for 25 years on a fixed term. But the most interesting stat, we think, is they also know that no one keeps them for 25 years because they don't meet their needs. The majority of customers cancel it after 7 years. So they know they're not going to even keep them for that long. They're not underwriting for 25 years. They're only anticipating their customers are going to keep them for a short period of time, because that's what happens. Because they don't, you know, everyone's needs change. You know, no one's ever, you know, needs the same amount of insurance for exactly the same need for 25 years. That's just insane to even think that would ever be the case. So then they're not. It's an illusion if people think that life insurance is the expectations it's going to go for the full term, because they know it doesn't, and the underwriting is accordingly. What the biggest, I think the most strange thing for life insurance is the fact that they've deliberately avoided engaging with a customer once a policy is sold. And as I understand it, the rationale is their fear is that someone is going to cancel, so they avoid getting in touch in case they going to cancel their direct debit. Which seems a very strange way about going and valuing your own product that you sell, but that is, so I'm told, the rationale. And of course we take a completely different view around that. Where the life insurance industry misses out against every other industry is they have no further information from the point at which they take out this policy and they take their 25-year bet against a life. They have no more data on that customer. The only other data point they'll ever get is either if they cancel or if they die. So from an underwriting perspective, that's awful. I mean, they don't learn anything, and no wonder it's a long term. So one of the key things around our product construct is we engage with customers on a regular basis. We make sure the policy fits them, but we also gather further data about them as an individual, about their health, about their lifestyle along the way. And so we're building up a far richer picture of those individuals. And we think in time we'll have a significant data advantage because, of course, we are able to understand, how those, on a broader scale, how people's health evolves over time. And not quite the equivalent of telematics for life, but it's along those sorts of lines. It's a lot closer to that than the traditional methods. And those are the things that I think excite the reinsurers about working with us, is this opportunity of really evolving the whole underwriting thinking and modeling.
How do you do that? Is it through things like the wills and the death wish, which you have to tell people what that is? It's brilliant phrasing, but it has. And now I'm thinking about, well, what am I going to wish for? But
so let me briefly explain around the Death Wish platform, because you're right. This is really key. We've talked a lot about the product stuff that we've done. It's it's a flexible product. It's even the pricing is based on your age today, not averaged over 25 years. So it's always cheaper because we base it. That's how other insurance is priced. Based on your age today, not on your average age over 25 years. Health insurance, travel insurance. So we do all of those things. There's great product adjustments, but we come back to this question about how do we help people define the need for insurance? What do they need? And our route is this Death Wish platform. And it isn't a throwback to Charles Bronson. It is our Death Wish platform. We ask, rather than how much coverage do you want or how much insurance do you want, which we think is a really weird and difficult question that for even people in the insurance trade to answer, let alone man of the street. We ask a different question, which is, what do you want to happen when you die? Because actually that's what this product does. And so we look to face into that, which we think is really important, and address that. Now, it's still a hard question to answer. So to help answer that, we have this, what we call our Death Wish platform, which is this range of death wishes. And there's everything from the financially responsible, pay off the mortgage, pay off the school fees, pay your funeral. But far more interestingly, we then open up this almost limitless opportunity of identifying a myriad of other different things that you might want to make happen in the event of your death. And lots of different examples. There's things like sending your golfing buddies on a trip to Vegas in your memory, having a bronze statue of yourself made so no one will ever forget you. Some really emotional, touching ones. We love one guy left. He sends a big bouquet of favorite flowers to his wife every year on the anniversary of his death. So one chap wants to leave money to pay for a new pair of boots, a new pair of soccer boots for his son for every year, every season, just to make sure that he continued his passion.
Yeah.
So what these things do is they enable you to personalize this and really engage and deliver some really amazing special things. They might not be expensive, but it just really gets you to think about this whole eventuality of our deaths and what you want to make happen and how you can positively impact people's lives after the event. And we can't make death good. We're not in that business. We can't do that. We're not going to try and do that. But what we can do is help people do some really pretty amazing and special things in the eventuality that they do have the tragedy of a death, and particularly an early death. And that's what these death wishes are there to do.
It's a really interesting flipping on its head of the valuation of the policy, because otherwise you're asking someone, what's the net present value of all the things you don't want those you care about to worry about financially, which is so reductionist. For like the I'll say it in British, but like the football boots, right? The I don't know, what 20 years times 65 pounds or something discounted to today, like that's what you, let me buy a policy for 1,800 pounds or whatever it is. That just feels so, no, like I'm trying to talk about a meaningful connection with my child even when I'm gone, and to have them know that they're supported, which is a much richer conversation and leads to so many other possibilities versus like, I need 50,000 pounds of coverage. So, okay, well, for what? And what does that even mean? And how do you know if that's enough or not? And what sort of memory and support are you leaving behind other than some bills paid? It's just a totally different way to engage in the notion of not being present in your life anymore.
Yeah, exactly. I mean, if you will, just on that theme, just to, I suppose, illustrate the power of these things, let me just read you, if I may, Brian, one of the death wishes which we use as an illustration. I'll change the names, and this is just verbatim what the customer has written. And the death wishes, sorry, I get quite emotional, really, actually. The death wishes, your last tattoo. I've loved you for so long. I got you your first tattoo, and here you are, and here is your last with me. I've paid for it, so make it memorable, but no names. We never named anything between us before, apart from the girls, so don't start now. I'll miss you being I'll miss you being my rock, my diamond, but you've got to be that for the girls now and your brothers. I love you, dear heart, and I'll watch over you. Wow. That's just something that one of our customers has written as part of their life insurance policy, as a death wish, obviously as a beautiful phrased death wish to leave them a tattoo.
And it's written to someone, right? So it's to that person you care. I mean, it makes the whole process of figuring out what you want to leave behind so personal and connected to your actual life experience, which is not selling a financial product.
Exactly. And it's one of the things we often observe is, I mean, life insurance is the only product you buy that you can't be the beneficiary of.
Yeah.
Because you have to be dead.
Yeah.
So there's no mechanism currently in other products to sort of nominate, well, you can nominate the beneficiary, but to let them know that you've done this. And obviously our death wishes, one of the powers of the whole death wish platform is you can share those. You share them at the time you make them. If you wish to, you don't have to, but you can share them with your loved ones, with anyone you like. And that brings us back to this broader purpose that we have, which is helping people just talk about and plan for, what is an inevitable event of their death, because we think it's a healthy thing to do. We're not saying you should be going off and talking about death every day or every night, but it's a really important conversation to have with those that you love when you're healthy. Why wouldn't you? And this is a helpful way, we think, of triggering those conversations.
And is it things like this that become the mechanism to have a more consistent view of that person and what they're doing and their exposures and their needs throughout their, I don't want to say their policy term, but their life? Is that how you start to get more insight? I mean, sort of the telematics analogy, or is it through wearables and that sort of thing? How are you thinking about this?
Well, we think of it through several routes. So, I mean, there's a whole, we make it easy for people, and we're already in conversations with some of the, the opportunities of gathering data through all the sorts of different, as you say, wearables, smartphone health data, and so forth, and how we can incorporate that. But actually, people's lifestyles and what matters to them often comes through their death wishes too. And I think a few minutes ago, you asked the question about how we engage with customer, at this sort of point. We do it at an annual review, because it seems as good a time as any, where we go back to the customer, we check that their cover still meets their needs. And the way we do it, of course, is we say, well, here are all your death wishes. This is what you said you wanted to happen. Are they all fine? Do you want to change any of them? Either the death wish itself or the amounts or whatever. So that's the engaging thing, because suddenly, if I came to you and said, well, you've got a $500,000 of cover, is that okay? It's like, I don't know.
Yeah.
But if I come to you and say, right, so you've got here a death wish for your mortgage, at this level, a death wish for your funeral at this level, and et cetera, you've got something that actually means something, and you can make an evaluation. And then if your life has changed, or whatever stuff has happened differently, you can make those changes. And one of the things I think a lot of our customers love, and it sounds strange, but we have a higher sum insured than the average. So people take out more death wishes because they're inspired by some of the things that they see. And we do offer them that they get to the sort of checkout, and we say, right, well, that's great, this is all what you said, but did you know that actually these are the top 10 death wishes this month? If you want to add any of those in, if you think any of those might resonate, just add it in. And sure enough, people do. So but they do it. If we'd just said, oh, do you want an extra $20,000 worth of cover,
right,
it'd be like, why?
Yeah. I mean, it really does. It seems to get over, for me, a big problem with life is the whole, it's sold, not bought. And a big part of it is how do you, as the individual buying the policy, even begin to contemplate what you really need, other than just some random abstract number that doesn't feel inadequate to you? It's like, oh, $500,000 or $1 million. Oh, well, $1 million sounds, if I can afford it, yeah, I should probably do that. But have you really thought through it? And maybe neither of those numbers is right, because you're not speaking to me in terms of kind of life units, the things that I need to keep going when I'm gone. These death wishes seem to almost like unitize the currency of figuring out what you need.
Exactly. And I guess if you get good advisors, that's what they will tell you they're there to help you with, to work through all your needs and so forth. But unfortunately, I say unfortunately, what they tend to do is go through those financially driven things. So
it's liabilities.
Exactly.
Yeah,
that's what they'll talk about. And they might say, oh, and do you have, what about your children, and will they have schooling and this, that, the other? So it's quite a functional conversation. It isn't an emotionally engaging conversation. And that possibly is the phrase we use quite a lot, which is surprising. And when you think about it from a life insurance perspective, is we believe that our customers are emotionally engaged and locked into our products, or their products. They are theirs. They're tailored. I think it's McKinsey's have written about the current focus for insurance. And we talk about the future insurance. It is about tailoring product and tailoring things exactly to your needs, and this is the way that we do it for life insurance. Is it makes it intensely personal.
Just this week I read something from McKinsey, or just last week actually, as we're recording this, read something from McKinsey. I'm a McKinsey alum, so I'm always biased towards the stuff, but it was talking about the 2030s, and went through what's going to happen on the PNC side, and, you know, go from pay for a fixed coverage for an asset to pay for the mobility, or, you know, whatever the theme of what you're doing and creating exposures. And in life, instead of paying for a fixed payout, you're thinking about pay per life instead of pay per mile, pay per living. So if, you know, I go skiing tomorrow, my premium is going to be a little bit higher that day. But if I'm choosing to do something that's a safer behavior and it knows it automatically, then it's going to adjust my premium down for that day worth of exposure. So sort of getting it down to the behaviors of life. In your estimation, is that the path that things are headed? Like, is that where we want to take the pricing of this, or is that still kind of following a traditional mentality of there's some fixed amount at the end of the rainbow and we need to build up to that or not based on what you're doing to your mortality table each day?
Yeah, I think it is a really interesting, you know, what you described there is almost like a telematics of life. And I think that is a really interesting
exactly
route.
what they're talking about.
Yeah. And I think that is a really interesting route to deal with one element of it, which is the risk around you and your behaviors. But unfortunately, it's only one relatively small part. What it doesn't necessarily deal with is a lot of the health risks.
Mhm.
So unless you can start finding apps that can talk about, you know, your diet, talk about a whole lot of other exposures, you know, the number of deaths that are caused through, you know, accidents and so forth are relatively low. And so they're a smaller part of the underwriting equation. So I think there's definitely a place for this. I mean, it's one of the innovations I still can't believe it's not been done, but it's a very similar one in a very different space, which is travel. And I've always thought, well, this should just be on your mobile phone. Wherever your mobile phone is, you know, if you go abroad, you should automatically be covered, whatever country, because you know what, they always know where you are.
Yeah.
So it's so simple, but they haven't even done that yet. So if they haven't even got to that stage, you think that moving into the sort of impacting of lifestyle behaviors in life and risk is a long way down the line, which maybe we'll get to. But not for a little while. I do think that there is, you know, there is an element of that they'll become far more sophisticated. I think the first hurdle for life insurance is just giving flexibility to these products so they can apply the underwriting, and that's we haven't even made that step yet.
You're solely a term product right now, is that right?
Yes, that's correct. We just we believe that term insurance is the ultimate catastrophe insurance. It's aimed at that sort of younger audience. We've looked at some of the whole of life products and the older age products. I'd never say never, but we're not convinced of the value of those, because you're getting, obviously, by definition, you know, if you're selling life insurance to sort of 55, 60, 65-year-olds, you're getting towards the point where it's becoming an assurance rather than an insurance product.
Yeah, it is. So what I was wondering in that is because the simplicity and straightforwardness of the structure of term, does that, and I get, you obviously never say never, but do you think that that's sort of a prerequisite for creating these kinds of solutions for not the people who are buying insurance today, as you say, but all the people who are going without coverage that are leaving a need exposed? Does it take a product that is more straightforward, easier to understand, easier to create and manage, like term?
I think I do think that's a really important prerequisite, because most people, I mean, you know, we all know insurance is distress purchase. No one takes pleasure in buying this stuff. And so, you know, there isn't anyone who enjoys spending a long time doing, you know, the filling out the forms, answering the questions, and they can be really intrusive questions. I think I was just speaking to someone, actually interviewing someone today who is a customer of ours, and they love our product because we don't ask anything about mental health, because it doesn't have any significant impact for us. The only serious potential risk around mental health is suicide. And all life insurance excludes suicide for the first year, because of course there's a moral risk of someone who's having suicidal thoughts. They take out a life insurance policy in order to then kill themselves, and so that's accepted as standard. You have to do that. What unfortunately every other product has to then do is they say, well, we must include suicide at some point, so we'll automatically include it after year 1. And therefore, because we can't flex out of this, we have to ask hundreds and hundreds of questions around your mental health right up front, even though we're not going to cover you for suicide for the first year. And it makes it really hard to take it out. And that's insane. So what we do is you say, well, look, most people with a mental health condition aren't suicidal. They want life cover because they don't want to, they want, if they get run over by the bus or catch cancer like everyone else, they want to leave something behind. So we give them the option of excluding suicide for as long as they want. And what that does is it says, now this, this girl who took our policy out says it was extraordinary. She's had a history of mental health. There were no questions. She just took the policy out in 4 minutes, and she knows that we'll offer the opportunity if she wants to include suicide cover at a later stage. She'll have to answer a whole lot of questions. That can be her choice. But the point is, it's her choice. She's the customer. She's in control, and that's, I think, the sort of thinking that the industry needs to wise up to. It should be about the customer, and they're so product centric and so focused on underwriting and risk, and they forget that there's actually what matters at the heart of all of this is the customer who's having to deal with it.
I was having to remind someone the other day, you are not the customer. It doesn't matter what you want. It doesn't matter what you want things to work like. If that doesn't work for them, it's all irrelevant. And the problem, I think, to date is customers have been stuck with that. And now not so much. People aren't standing for it in the way that they have before, because now there are some alternatives, or everything else in their life has moved. And so their discomfort with that sort of mentality is much higher.
I think that's true. I think, and again, I guess we come back to, your theme around the future of insurance. And I don't think it takes much to look around the globe and see what solutions that are evolving, that you can see the direction. I think pricing is one we've already touched on. We actually think it's bordering on well, no, criminal is too strong a word, but it's certainly it's entirely inappropriate to sign up a customer for a 25-year product that they know they won't keep for 25 years and price it on the average of that 25-year product, even though they know the majority won't keep it. And if you look at Australia and New Zealand and that market, those products no longer exist. No one can buy a level term product because it's ridiculously expensive up front for the first few years. They've switched all to this sort of annually renewable pricing model because it's fairer for the customer. And the easiest way to illustrate that is if I said to Brian, I've got this great new product for you. So let's say you buy your health insurance right now, and obviously the health insurance is based on your conditions and your age and everything today. And I say, well, I've got a deal for you. Let's just say you pay, I don't know, $100 a month for your health insurance.
That sounds fantastic.
I'll take it. Okay.
No, maybe it's right. No, let's go with it. 100.
Let's go with 100. That's what you're paying today. And you know that's going to go up as you get older, because that's how it works. Well, and I come to you with a proposition, and I say, I tell you what, Brian, I've got a deal for you. You can pay $300 for the same coverage today, for a month, and we'll guarantee that it's $300 for the next 10 years. So is that a product that you think is good? You're paying 3 times the price for the same cover, and you'll continue to pay increase, for the next 5, 10. Why would you do that? But that is exactly what life insurance does. It doesn't make any sense. And so, you look around the globe and you see how whole markets, not just, someone coming up with a new product as we have in the UK, and, obviously I have a small number of, relative to the market, small number of customers, but the whole of the market in Australia has moved to this pricing, which is obviously better for the customer. Because, I mean, if nothing else, when can you afford to pay more? Is it when you are, starting out, you're, with a family and mortgage and you're mid-30s and, just buying a policy? Is that when you've got lots of disposable income? Or is it perhaps maybe when 15, 20 years down the line and, you've built a career and hopefully progressed and that you can better afford to pay more then. So, the way the life insurance product is constructed is from a customer perspective cannot make any sense. And I guess my only thing I find extraordinary is why it's taken so long for people to work out that we ought to do something a bit differently.
Yeah. Well, the good news is you have worked that out. So now we just need you to be wildly successful in the UK and then spread your wings and fly across the ocean and bring some of the joy here. We can all start making death wishes now. We can plan ahead. So it's really interesting for me. As you're talking, I'm thinking about my own exposure, my own policies, all that sort of thing. And when you said the thing about, people don't keep their life insurance, they end up canceling a few years on. I was like, no, I still have, no, wait a second. He's right. I've had 2 term policies that I certainly don't have anymore, but I bought them after my son was born. So it's somewhere in the past dozen years. I think one of them was probably 7 years and the other was probably 3, 4, 5 years until I canceled it. So yeah, and it shows how engaged I was in the product, how much I thought about what it was doing for me or not. The fact that I bought something that wasn't actually fit for what my needs would be. And I disengaged with it pretty early on. And I didn't even remember it as you're sat here talking about it until, it sparked a thought later. So that it says something versus having this real connection to the purpose of it to begin with, which was not some random dollar amount that happened to be like, it's not too expensive, I guess I'll buy that, which is probably how I arrived at the dollar amount, the face value of it, and not because I had done the math on what are the liabilities going to be and what will it cost to put my kid through school or whatever. It's a really, to your point, it's a customer way of rethinking what's being offered into the market, which then kind of makes you feel like, why are we offering anything that isn't from the customer standpoint and expecting them to buy it? They shouldn't be customers then if it's not actually for them.
Brian, it feels like I've got a convert.
You have a convert, and maybe it's a good thing that I have to wait. I can't go buy anything. I think I'm the only person who's like, ooh, I want to go buy insurance now. There's a problem with doing these interviews. I would be so overinsured in every single risk. Anyway, Phil, it was good fun, but I really do encourage people, even outside the UK, just to have a look at it and then think about what does that mean for your own take on who your customer is and how you're serving them. Because I mean, you absolutely engage in the actual issue, and not just for the product, but the way it's not been meeting needs for a lot of folks. For me, it was actually really exciting to see. And yeah, it's a bit cheeky and fun talking about death the way that you talk about it, but in a good way, because it gets people thinking about what do they really want to live on past them.
Yeah, well, I think one thing that we feel about it is life is too short to be morbid about this stuff, and you can have a smile. There's a huge amount of humor people use around death, and it's not always appropriate, it's not always the right time, and we understand all of that, and we don't never want to upset anyone, but yeah, life is too short just to be too serious all the time, and we think we can bring a bit of a smile to people's face at the same time. Well, all the more the better.
Yeah, that's brilliant, and you've done it in a really meaningful way. And that quote you pulled out from that death wish, I think proves that it's not all a joke, it's not all tongue in cheek. It's actually quite serious and inspiring in that sense.
No, and that's something that I guess we know that some people see the brand and they just, as I say, they think there's some sort of brand. As I mentioned earlier, they think it's a brand exercise. We are so much more than that. We know that. We know that. We feel passionately about what we're doing, and we just hope that people will take the time to come along, have a look, and engage with it. And we believe that the evidence is, as we see it from our customer feedback, which is off the charts, NPS of 85.
Wow.
Trustpilot review, Trustpilot reviews you know, 4.9. Yeah, everything
Wow.
tells us they, you know, they absolutely love
Yeah,
what we do.
that's outstanding.
Yeah.
Phil, thank you for this. It's really been great to hear a bit more of the story, and the genesis for the idea, for yourself and your co-founders is, for Andy, really, really strong. Thank you. I appreciate the time today.
Absolute pleasure, Brian. It's been great to meet you.
You could obviously tell, but I was very excited to talk to Phil and to get into what they built at DeadHappy. It really is pretty cool. Please do go check out their website. It's you start to read through it and you see the things that they're doing. And you're like, oh, actually, that makes a lot of sense. And look how they're positioning it, or why they're talking about this particular thing in this particular way. I think this is one of those great moments where it forces us to step back and think again about why we do what we do. And, you know, we talked about it a bit about like, well, it's those mortality tables, and you think about how long do you get to invest the premium, and will that cover the, you know, the payout and all that kind of stuff. Well, but why? And what are other things we can do to still have a viable business, but one that actually is better meeting the customer's needs, or is creating those points of value that customers are seeking, like flexibility, or like a better understanding or way to come to the sense of what it is they need to protect. It's interesting. And it's a perspective I think all of us can benefit from. Whether you're in life insurance, P&C, health, I don't really care. Even a service provider, thinking about what your customer needs and how to get them to value. I think DeadHappy's done a really good job of sort of redefining that approach. So I'm definitely a fan. You know, I'd love to see them come across the pond to the US. I think it'd be really interesting. Obviously, hope they make it to other markets as well, not just being me centric. But it's an interesting and valuable way to rethink things. And, you know, Phil mentioned what happened in Australia and New Zealand, where the whole market shifted. It's going to be really, I think, critical over the next 10 or so years to see how some of these other ways of thinking about what we're doing start to redefine the core of the space. I think life insurance is one of those areas where that can happen. So very glad that Phil took some time and shared his journey and what they're trying to build at DeadHappy. Please do check them out and just sit back for a minute, take some inspiration and think, how does this apply to what we're doing? Not the exact thing they're doing, but what could we do, you know, in our context that hits at some of these values, some of these approaches can be really valuable for you and for your customers, your partners, and everyone that you work with. So thank you to Phil for coming in and sharing some more. Thank you to Pinpoint Predictive for sponsoring this episode. And thank you to all of you for tuning in for another episode. It was great to hear Phil's story. I hope it was inspiring for you. And I hope you'll join me next time for another episode of The Future of Insurance. Thanks, everyone.